Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And these are all educational videos, and we're going to teach you what SPY looked like yesterday and how successful it was to trade it when a lot of people were very bearish. So let's go ahead and pull this up. This is the SPY yesterday. And there's a certain channel in here I want you to recognize. It's called a horizontal sideways channel. It could be called a Darvas box. That's what I call it. And it was a very beautiful trade yesterday, and it could have been scalped many times if you know where resistance is and you know where support is. So we had a couple real good things going on with this trade yesterday, and there's a lot of bears out there that were too scared to trade it. But if you trade inside the channel, you can be very successful, and that's called a Darvas box. And we're going to go ahead and type this in right now. I'm going to use a tool here. We'll just bring it all the way across and all the way right straight down, just like that. You can see the sideways channel, and you can see what happened here at open. So right at open we had the knife, and she pulled down and she made a little expansion pattern, or a little downside channel here. This is called a snake. So once you broke out of that snake, we had a 1 2 3 4, or 1 2 3 right here at open, where she broke out and had a big engulfing candle. Now I called this trade out first thing in the morning. I saw a 1 2 3 down here, and I said, let's take this trade up and run it up to the 200 and get out of the trade as fast as you can. At that time it held under the 200 and then broke out again, pulled back, and then we had another breakout to the top. Called this trade out too on the two engulfing candles with this here long leg doji, long leg hammer with kind of a huge body on it. And she went ahead and bounced on up off that 50 SMA and ran up to the top, and we got out of the trade. And by that time she had a pretty good run. I sold some here at the 200, held on to it, and took it all the way up to the top. Then she came back down. She found support off this here channel right in here. So I'm going to draw that price line right across. So there's two kinds of boxes. This one here is starting to trend down. So if you go over here and you look at the box, you can see that we were going in a downtrend, and we created a horizontal channel which was consolidating, and it consolidated most of the day, and then it went ahead and went on down, and that's called a bearish triangle. If you're going to the upside, that would be called a bullish triangle, and you would go out and eventually you would break up. It always, either one of these patterns depend on market conditions, but we could tell that we're in an way overbought market, and you can hear by the commentary that you're hearing on CNBC and Schwab that they were kind of bearish because we're at such extreme high levels. I mean, extreme high levels, and you got to trade that market that way. If you think you're very overbought, you've got to be more defensive in your trading strategy. You just can't always be complacent and think the market's going to continuously go up. So we had fair warning. A lot of fat cats, well, we're up 6%, 7% on NVIDIA in a month. You know, that's a little bit too much. And we are up too much. I mean, we're up 1,100% on this stock in a year and a half. 1,100%. Let me make that clear. 1,100% is just phenomenal compared to the way I've been trading. I've been trading the market 20 years. I know what's overbought. This is extremely overbought. Extremely. I don't care what numbers they give you. So we're coming in a downtrend and we're going sideways and we're pulling back again. This is a very volatile market right now. You can make a lot of good money if you just realize that we're way overbought. And these pullbacks will come, and then you can take good advantage of them. Bearish and bullish. So we're trading this stock all day long off this bottom channel until the end of the day. And then she went ahead and she knifed, and she let out some more. I mean, like I said, this market's way overbought, and we could go down a lot more, but I'm going to show you where I think we're going to go. So a bear flag, when you're going down in a downtrend and you consolidate most of the day. I'm not going to say today's going to be like this, and I'm not going to say tomorrow's going to be like this, but I am going to say if you can spot a trend like this, you can really, it'd be a great scalping day. A great scalping day. Just get in and out, 15-20 minutes, get out of the stock. And every one of them had a perfect setup. 1, 2, 3, 4. You can make a lot more. Double bottom, triple bottom. 1, 2, 3. 1, 2, 3, 4. Boom. That's the sweet spot. Same thing right here. 1, 2, 3. Boom. 1, 2. Boom. Then you had another one right here. It held this here support level consistently, so I got into the trade. Everybody else was a little bit bearish and went ahead and went on down after it broke out to a double top up here. You got your snake, breakout, pullback, double top, exit idea. Consistent. And then we went ahead and sold off the rest of the day. So I'm going to pull up the weekly. I'm going to erase all this stuff here. Now we're getting back to the top of this channel right here. Top of this channel. And we respected this here doji. It's a red doji. That's a bear flag. That's a bear flag. So this stock can come down and hit the 9 and bounce off the 9 and respect it and then come back up. This is a triple top on the weekly. You got each one of these candles represent a week. So you got 1, 2, 3, down. You got a doji, down. That's a bear flag. Bear flag right there. Them dojis. Then we had the 3 black crows and bounced off the 21. I called this trade out too. So I'm going to set an alert right off the bottom of that wick, and that's at 525. The next support's going to be right here on the bottom of this candle. So I'm going to put price line on the bottom of that candle. Then the next one's going to be right off that 9. Now as long as we hold the 9, we're still bullish, and that's right around 519.26. 519.26. If we hold this here candle right here, we could still be bullish, but if we break the 9, we could probably short it all the way back to the 21 again, and then bounce off the 21 and do what we did here with the 3 black crows. So that's a bear flag on a doji. We try to pull it back to the previous low, and it didn't support it, and went ahead and we're going to be looking at the 9. Now I'm going to pull this back up to the, let's go to the 5-minute, 2-day. And we're right close to that support level. Again, let me go back to the weekly. 522.69. So I go back to the weekly again. 522.41. Is the bottom of that there flag right there on that candle. This is a weekly candle. Weekly. So if we hold that support today, we'll move back up. If not, we break below that 522.41, we could easily come down and hit the 519.26, 21, 30, 519.50, somewhere in that vicinity. It doesn't have to be perfect. Nothing ever is. But I can get these things right to the penny almost. Many a times. So keep an eye on that candle. If that doesn't hold, we're going to hit the 9. And if the 9 doesn't hold, the 519.26, 519.21, we could easily drop down to this previous lower support levels. Each one of these candles will be a support level to trade off of, the body of them candles. And that's it. I just want to show you this here chart pattern that we traded yesterday. It's called a rectangular horizontal chart pattern that could be bullish or bearish. It depends on which direction the market is and market conditions. Also, they call it a Darvas box. So this is the sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now and trying to pick the next move on a stock. Have a great day. Washboard Jim.